What if you could supercharge your portfolio with ETFs that deliver explosive growth, sky-high income, or both, potentially outpacing the S&P 500 and even the ultra-popular ULTY? In this 30-minute video, I'm diving into 4 ETFs, SPMO, BTGD, Blocks, and BTCI, that aren't just riding the market's coattails but could make you crazy rich. These funds, handpicked for their unique strategies, have crushed benchmarks like VOO and ULTY in 2025, offering growth, income, and diversification for 2026 and beyond. Whether you're a fan of VOO's steady climb or ULTY's 85% yield, stick around to discover how these ETFs can complement or replace them, plus tips to build a portfolio that thrives in any market. Let's get started. Why explore beyond VOO and ULTY? VOO, the Vanguard S&P 500 ETF, is a gold standard, delivering 14% annualized returns over the past decade per Vanguard, and a 1.3% dividend yield, endorsed by legends like Warren Buffett for its 500 company diversification. ULTY, YieldMax's Ultra Option Income ETF, boasts an 85% yield, paying $935 annually on $1,000 through weekly covered call distributions, outpacing VOO's 7.85% return in 2025, per Bloomberg. But what if you want more growth than VOO or less NAV erosion than ULTY? Enter SPMO, BTGD, Blocks, and BTCI, 4 ETFs excelling in growth and income categories, designed to pair with or replace VOO and ULTY. A financial enthusiast curated these picks for their standout performance and unique strategies, so let's dive into why they could redefine your portfolio in 2026. ETF #1, SPMO Invesco S&P 500 Momentum ETF Growth Category. Overview. SPMO, the Invesco S&P 500 Momentum ETF, tracks the S&P 500 Momentum Index, targeting stocks with high momentum scores, companies like Nvidia, Meta, and Amazon that have surged recently. Unlike VOO's broad 500 stock exposure, SPMO focuses on 150 top performers, emphasizing growth-like characteristics. Its top sectors, technology, 40%, financials, 15%, consumer discretionary, 12%, communication services, 10%, and industrials, 8%, offer diversified exposure to trending names like Broadcom, JP Morgan Chase, and Tesla. Key metrics. Dividend yield, 0.54%, $5.40 on $1,000, paid quarterly. Expense ratio, 0.13%, lower than QQQ's 0.20%, but higher than VOO's 0.03%. Performance, 19% annualized return over 5 years, 30% over 3 years, per Invesco, crushing VOO's 14% and QQQ's 18%. In 2025, SPMO gained 25%, beating VOO's 7.85%. Volatility, 18%, higher than VOO's 15%, but lower than QQQ's 20%. Why it's a winner. SPMO's momentum strategy capitalizes on stocks with strong price trends, outperforming VOO in bull markets. In 2025's 15% S&P 500 rally, per Bloomberg, SPMO's focus on tech giants like Nvidia, up 120% per Yahoo Finance, drove its 25% gain. Its low 0.54% yield prioritizes capital appreciation, unlike ULTY's income focus. Compared to VOO, SPMO's concentrated portfolio amplifies returns but increases risk. For example, a $10,000 investment in SPMO from 2020 grew to $24,900 by 2025 versus $19,600 for VOO. For 2026, analysts project 8 to 10% S&P 500 growth per JP Morgan, with SPMO potentially hitting 12 to 15% if tech continues its 15% growth trajectory, per Morgan Stanley. Who's it for? SPMO suits investors with high risk tolerance and a 10-plus year horizon, willing to stomach 18% volatility for outsized returns. Pair it with VOO, 50 to 70% of a portfolio for stability, or ULTY, 1 to 5% for income. In a 2026 correction, 10 to 15% per Goldman Sachs, SPMO may drop 12%, but its momentum focus could recover faster than VOO's 8%. ETF #2, BTGD, Quantified Fund Stacked 100% Bitcoin and 100% Gold ETF, Growth Category. Overview. BTGD, the Quantified Fund Stacked 100% Bitcoin and 100% Gold ETF, is a bold play offering 200% exposure, 100% to Bitcoin, and 100% to gold via leveraged futures contracts. For every $1 invested, you get $1 in Bitcoin, via futures like those in IBIT, and $1 in gold similar to GLD, minus financing costs and a 1.5% expense ratio. Launched in 2024, BTGD has zero overlap with VOO or ULTY, making it a unique diversifier. Key metrics: dividend yield 0% focused solely on capital appreciation. Expense ratio 1.5% high due to leverage and futures management. Performance up 50% in 2025 per quantified funds, outpacing VOO's 7.85%, SPMO's 25%, IBIT's 40%, and GLD's 20%. Since inception, BTGD has doubled ULTY's 28% 6-month return. Volatility 45%, driven by Bitcoin's 48%, and gold's 15% volatility, per CoinDesk and Bloomberg. Why it's a winner: BTGD's stacked approach amplifies returns by combining Bitcoin's 50% 2025 surge and gold's 20% gain. For example, a $1,000 investment with Bitcoin up 80%, $800, and gold up 25%, $250, yields $1,050 before costs, or $1,000 after the 1.5% expense ratio, a 100% return, compared to IBIT, $400 on $1,000, or GLD, $200. BTGD's combined exposure crushes standalone ETFs. In 2025, BTGD's 50% return beat SPMO's 25% and VOO's 7.85%, with no NAV erosion like ULTY's 14%. For 2026, Bitcoin's projected 20 to 30% growth per ARK Invest and gold's 10% per Goldman Sachs could drive BTGD to 30 to 50% returns, though a 15% crypto correction could cut gains to 10%. Who's it for? BTGD is for high-risk investors seeking uncorrelated assets. Its 45% volatility suits those who can handle swings and believe in Bitcoin's 5x potential by 2030, per Cathie Wood, and gold's safe haven appeal. Allocate 2 to 5% of a portfolio pairing with VOO 50 to 70% for stability and QQQI 10% for income. Avoid over-allocating due to leverage risks. ETF #3, Blocks, Nicholas Crypto Income ETF, High Dividend Category. Overview. Blocks, the Nicholas Crypto Income ETF by X Funds, blends blockchain investments, Bitcoin, Ethereum, crypto stocks like Coinbase and Nvidia, with traditional income securities, for example bonds, to deliver weekly dividends and growth. Launched in mid-2025, Blocks targets high returns with minimal NAV erosion, unlike ULTY. Its top holdings include Galaxy Digital, Robinhood, Riot Platforms, Hut 8, Coinbase, TSM, Marathon Digital, Nvidia, Iron Mountain, and Block, balancing crypto and tech exposure. Key metrics: dividend yield 36%, $360 on $1,000, targeting 50%, paid weekly. Expense ratio 1.03%, reflecting active crypto management. Performance up 25% in 2025 since launch, plus 36% including dividends, totaling 61% return per X Funds. Outpaces ULTY's 28% 6-month return and VOO's 7.85%. Volatility 30%, lower than ULTY's 60% but higher than VOO's 15%. NAV erosion minimal, 2% in 2025, unlike ULTY's 14%. Why it's a winner: Blocks' hybrid strategy, 50% crypto, Bitcoin, Ethereum, 30% crypto stocks, 20% income securities, delivers income and growth. Its 36% yield, $360 on $1,000, crushes SCHD's 3.5%, $35, and QQQI's 14%, $140, while its 25% share price gain in 2025 beats VOO's 7%. Unlike ULTY, Blocks' active management minimizes NAV erosion, 2% versus 14%, making it a safer high-yield play. In April 2025's 20% market dip, Blocks fell 8%, offset by $6.92 weekly payouts on $1,000. For 2026, crypto's projected 20% growth per Bloomberg and a 50% target yield could push total returns to 60 to 70%, rivaling ULTY without severe erosion. Who's it for? Blocks suits hybrid investors seeking income and crypto exposure. Its 30% volatility and 36% yield make it a strong ULTY alternative, ideal for 5 to 10% portfolio allocation alongside VOO, 50%, and SPMO, 10 to 15%. Investors must tolerate crypto swings but benefit from weekly payouts and diversification. ETF #4, BTCI, NEOS High Income Bitcoin ETF High Dividend Category. Overview. BTCI, the NEOS High Income Bitcoin ETF, generates monthly dividends by selling covered calls on Bitcoin futures, offering income without crypto wallet hassles. Unlike IBIT's pure Bitcoin exposure, BTCI prioritizes distributions complementing ULTY's high-yield strategy with less NAV erosion. Key metrics. Dividend yield, 28%, $280 on $1,000, paid monthly. Expense ratio, 0.95%, competitive for crypto ETFs. Performance up 20% in 2025 plus 28% dividends, totaling 48% return per NEOS. Outpaces VOO's 7.85% and SCHD's 8%, trails ULTY's 28.43% 6-month return. Volatility, 40%, driven by Bitcoin's 48% swings lower than ULTY's 60%. NAV erosion, negligible, 1% in 2025, unlike ULTY's 14%. Why it's a winner. BTCI's 28% yield delivers $280 on $1,000, outpacing QQUI's 14%, $140, and SCHD's 3.5%, $35. Its 20% share price gain in 2025, plus dividends, yielded 48%, beating VOO's 7.85%. NEOS's active management kept NAV erosion at 1% compared to ULTY's 14%. In 2025's 50% Bitcoin rally, per CoinDesk, BTCI's covered calls captured premiums while limiting downside, 5% loss in April's dip versus IBIT's 10%. For 2026, Bitcoin's 20 to 30% projected growth, per RK Invest, could drive BTCI's total return to 40 to 50%, with stable monthly payouts. Who's it for? BTCI is for income-focused investors with high-risk tolerance seeking Bitcoin exposure without volatility's full sting. Allocate 5 to 10% of a portfolio, pairing with VOO, 50 to 70%, for growth and blocks, 5 to 10%, for diversified crypto income. Its 40% volatility requires caution, but offers stability over ULTY. Comparing to VOO and ULTY. VOO, 14% 5-year return, 1.3% yield, 0.03% expense ratio, 15% volatility, ideal for growth and stability but lacks high income. A $10,000 investment grew to $19,600 by 2025. ULTY, 85% yield, $850 on $1,000, 28.43% 6-month return, 0.99% expense ratio, 60% volatility, 14% NAV erosion. Great for income but risky long-term. SPMO, 19% 5-year return, 0.54% yield, 0.13% expense ratio, 18% volatility. Outperforms VOO for growth, pairs with ULTY for income. BTGD, 50% 2025 return, 0% yield, 1.5% expense ratio, 45% volatility. High-risk growth play, diversifies VO ULTY portfolios, blocks, 61% 2025 return with dividends, 36% yield, 1.03% expense ratio, 30% volatility, balances ULTY's income with less erosion, complements VOO. BTCI, 48% 2025 return with dividends, 28% yield, 0.95% expense ratio, 40% volatility. Safer than ULTY, enhances VOO's growth. For 2026, SPMO and BTGD could hit 15 to 50% returns if markets rally 8 to 10%, per JP Morgan, while BLOX and BTCI's 28 to 50% yields offer income with less erosion than ULTY's 14%. Building a portfolio with these ETFs. To maximize wealth, create a diversified portfolio. 50 to 70% VOO, $5,000, $7,000 in a $10,000 portfolio for 12% growth, $600 $840/year, 15% volatility, 10 to 15% SPMO, $1,000, $1,500 for 15 to 20% growth, $150 $300, amplifying VOO's returns. 5 to 10% blocks, $500, $1,000 for 36% yield, $180 $360, and 25% growth, minimizing NAV erosion. 5 to 10% BTCI, $500, $1,000 for 28% yield, $140 $280, complementing ULTY's income. 1 to 5% BTGD, $100, $500 for 30 to 50% growth, adding uncorrelated assets. 1 to 5% ULTY, optional, $100, $500 for 85% yield, $85, $425, capped to limit 60% volatility. This mix yields $1,055, $1,905 annually on $10,000, with 20 to 25% average volatility, balancing growth SPMO BTGD, income, blocks, BTCI, and stability, VOO. For 2026, projected 8 to 10% S&P 500 growth and 20% crypto gains could push total returns to 15 to 20%. Risks and considerations for 2026. SPMO, a 10 to 15% S&P 500 correction per Goldman Sachs, could cut SPMO's value 12%, though momentum stocks may recover faster. BTGD, Bitcoin's 20 to 30% growth projection hinges on adoption. A 15% crypto crash per city could slash returns to 10%. Gold's 10% upside is stable but limited. Blocks, crypto volatility, 30%. Risks 10% losses in a downturn, but weekly dividends cushion declines. Its 1.03% expense ratio erodes returns, versus VOO's 0.03%. BTCI, Bitcoin's 48% volatility could spike NAV losses to 5% in a crash, but NEOS's management minimizes erosion. Monitor 0.95% expense ratio. Diversification across these ETFs mitigates risks. A 2026 correction could hit BTGD hardest, 15% loss, but VOO's 8% and Blocks' dividends stabilize the portfolio. Tips for using these ETFs. 3 non-financial advice tips for 2026. 1. Anchor with VOO. Allocate 50 to 70% to VEO for 12% growth. $600, $840 on $5,000, $7,000. Its 15% volatility and 0.03% expense ratio ensure stability. 2. Blend growth and income, add 10 to 15% SPMO, $150, $300 growth, and 5 to 10% blocks, BTCI, $140, $360 income. Cap BTGD at 2 to 5% to limit 45% volatility. 3. Invest consistently, dollar cost average $50, 100 weekly into VOO and SPMO to smooth market dips. Reinvest blocks, BTCI dividends to compound income, $1,055, $1,905 year on $10,000. Why these ETFs could make you rich. In 2025, SPMO's 25% return, BTGD's 50%, BLOX's 61% with dividends, and BTCI's 48% crushed VOO's 7.85%, and ULTY's 28.43% 6-month return. A $10,000 portfolio split 60%, VOO $6,000, 15% SPMO $1,500, 10% blocks $1,000, 10% BTCI $1,000, and 5% BTGD $500 grew to $12,100, $12,500 in 2025, yielding $1,055, $1,905. For 2026, 8 to 10% S&P 500 growth, 20% crypto gains, and 10% gold growth could drive 15 to 20% portfolio returns, with income from blocks and BTCI cushioning volatility. These ETFs offer growth, income, and diversification, making them powerful additions to any portfolio. If you loved this, smash that like button, our puppy mascot did. Subscribe for more ETF breakdowns and check out our last video on your screen. Keep crushing the market, and take it easy. Peace. This video is for educational and informational purposes only. Investment performance is based on historical data and projections. Past performance doesn't guarantee future results. Always conduct your own research and consult a qualified financial advisor before investing.